Hi, and welcome to our latest HAI at Work webinar. Today we're going to be discussing trends in aviation insurance. Today we only have two speakers for you. The first, James Viola, our president and CEO of HAI. And today we also have James Gardner, who is the president of his own insurance business, but is also attending the webinar today in his role as president of the board of directors of the Aviation Insurance Association. As always, we do invite you to ask questions today. We'll address as many of the questions as we can at the end of the webinar, at the end of the presentations. To ask questions, if you'll note that there's a box on the side of your screen for questions, type your questions in there. We ask that we do be able to identify you when we ask the question later on. The other thing I want to address right now is that this webinar is being recorded. We will make the link available either later today or tomorrow to everybody who is watching today. So let me go ahead and get started, and we'd like to introduce James Viola, President and CEO of HAI.
All righty. Well, good afternoon. It's glad to have all you that have joined us again on Thursday afternoon at HAI at Work. The Helicopter Association started these webinars with the needs of our members and the industry in mind. And over the last couple of weeks, we've received suggestions for topics from our viewers and also from the HAI staff who's been working with you that also contribute ideas. So together, we are focused on getting you the information we think you need, and you also agree to help you thrive in the industry, either as individual operators or also as some business owners that are joining us as well. In today's aviation industry, one of the fundamental things everyone needs is aviation insurance. And I know I heard that when I went through Heli Expo and met a lot of people. So whether you're flying an R-44 Robinson today for fun, or if you oversee a complex fleet of rotorcraft used for transportation in the 135 world, or pure vertical lift work that's being done every day out in the field, you need aviation insurance. I'm not sure when the first aviation insurance policy was written. Maybe Jim can answer that later, but I don't think that it was when Wilbur and Orville were covered when they were down flying in Kitty Hawk. But my guess is that soon after, people started to think about using insurance to help protect themselves and their property. So today our insurance cover dictates a lot about what we fly, about where we fly, and then when we fly, and what you have to do and what can you do with that aircraft. So it's essential for every business, and that's why it's critical for your success that you understand the aviation insurance business and how it affects you. So even before COVID-19 hit, as I said, out in Heli Expo, everybody was asking me questions about the aviation insurance and why the disruption was happening with the rates going up, and a lot of it was due to the 737 MAX accidents. And I met Jim Gardner out there. So now we have additional economic issues stemming from the pandemic. As a result, more people have more questions about their insurance policies and the potential, if not the actual increase in rates that are happening. So we figured it was a good time to get Jim Gardner to come join us. Jim is a 14,000-hour ATP rated pilot, so he understands aviation. And before starting his aviation insurance business, he had a 30-year career in the military and in the commercial aviation. So today, Jim, just as Dan mentioned, is speaking to us from his capacity as the president of the board of directors for the Aviation Insurance Association. And I'll also note that I'm planning to speak to them at a virtual conference on Monday. So it gives Jim, hopefully, is motivated to do a good job for HAI today. So let me now turn this over to Jim, who's ready to brief us on the changes in the insurance, and then he's going to answer some questions. So Jim, please take it from here.
Well, thank you very much for inviting me to speak, and I appreciate your willingness to speak with our association next week. I wanted to cover the trends in aviation insurance to let you kind of know, first of all, who we are, and give you kind of an economic foundation, some of the changes that have been going on, and then we can address some specific issues created by COVID-10. Next slide, please. The Aviation Insurance Association is truly an international association of aviation insurance supply side professionals. What that means is we create, sell, deliver, and administer the product to you, the consumer. We include underwriters, agents and brokers, insurers and reinsurers, international brokers, aviation claims, and attorneys. Next slide, please. The focus of the Aviation Insurance Association is to provide professional aviation insurance specific education, including programs like this. We facilitate domestic and international business, providing networking opportunities across divisional lines. We cultivate young professionals into the industry, and we promote aviation safety. Some of the trends in aviation, next slide, please. The trends in aviation insurance are these. There's been seismic changes over the last 2 to 3 years. It's been initiated by the capital providers, those who provide the money that provide the insurance stability by which assures that your claim is going to be paid. And it is driven by years of a soft market that's marked by the lowest rates in history, unprofitability, unsustainable premium shrinkage, and corresponding increase in the cost of loss. Change, please. 3 key factors driving current changes: profitability, or should I say unprofitability, uncertainty, the uncertainty of in the marketplace, and capacity. This next slide, as we go to it, will give you, and it's not very nice here, doesn't come up very well. Well, let me give you a thumbs eye view. What we have is a graph that shows profitability in the industry between 2000. There we go. Go ahead and add all of them in if you don't mind. So it shows profitability from the years 2009 to 2016. This is a slide I showed Gamma back in October of 2019 before the 17 and 18 numbers were in. And as you can see, since 2009, the industry has trended toward unprofitability, where in 2016, losses were about a nickel for every dollar they collected. So losses 105%, collections 100%, not a profitable place to be. Next slide, please. This slide adds 2017 and 18, a little bit different view, but shows you 2 things. It shows you that we're still trending upward as far as losses. In 2018, 15 cents on every dollar of red ink, and that's across the board, and that's in general aviation and the U.S. markets. It has nothing to do with the rest of the world. And as you see on the bottom graph, it shows you from 2008 that rates continued to decrease, although in 2012 and 13 they decreased at a decreasing factor until 2018 did rates just start to go up at about a 15% clip or 10% clip, and in 2019 a 15% clip. The fact is, in 2018 we were losing 15 cents on every dollar, and that's just simply not sustainable. So next slide, please. So this is all driven by the model of what we call the model of uncertainty. And the uncertainty is you just don't know how much or when or where the losses are going to be. For instance, catastrophic or large losses. A man burned 90% of his body, received a $100 million settlement in an accident. In 2018, the bus shelter fell on a dancer, $115 million. I mean, who could predict the fatal accident involving Kobe Bryant? And that's not going to be a small change either. Like it or not, fair or not, the ongoing impact of Boeing will affect all insurance buyers because it's just a big number. And how do you predict those type of things? So the insurance company has got to capitalize itself to sustain itself when there are these types of uncertain losses. Next slide, please. And just to give you an idea of of the Boeing predicament, it has to do with grounding. You've got all the Boeing MAX 8s out there grounded. It's accumulating losses every day. Grounding started back in 1955. In 2008, it was about $113 million in annual claims. In 2018, from 2009 to 18, it exceeded $1 billion, and it just keeps going up. So these are the things that are impacting you as well as every other insurance buyer. Next slide, please. To keep that all in perspective, just consider this. In 2005, it's estimated that the worldwide total annual aviation insurance premium was $7 billion. That is a fraction of the total property and casualty insurance premiums collected around the world. In 2019, once all the figures are in, we may be lucky if we total over $4 billion. And as you can see, just with 1 or 2 catastrophic losses, that's all gone. So the industry, in fact, still is not capitalized for a catastrophic loss. Next slide. Again, just to tell you a perspective of where we are, in 2005, we had a shortage of markets. These were them. You basically had 9 markets or 8 markets, and that was it. U.S. specialty and aerospace insurance managers kind of looked at the low end. Phoenix, now Old Republic, W. Brown, mid-market focus, and then AIG Global, USAIG, were your major risk markets. And that was at the height of the hard market, where rates were extremely high. Enter the next slide. And in 2006 and 7, you started seeing an influx of insurance companies wanting to insure aviation, including helicopters. And what this does, it brought a level of competition to the insurance world. So next slide. In 2017, it was at the height of the soft market. We had the maximum number of insurers. So what's happened between now and then? Well, in an effort to reduce losses and return to profitability, each insurance company, next slide, please. Each insurance company continues to independently go through a process of review and evaluation. They evaluate their current books of business. They change their appetite for poor or unprofitable segments. They are returning to risk management underwriting, and that is key to what you're about to see today. Next slide, please. I always like to put this slide in there. It's the 3 elements of risk. Risk avoidance is don't do it, don't own it, don't buy it. Well, you're already in aviation, so that's out the window. Risk retention and mitigation. You're going to retain some type of risk, no matter how much insurance you transfer to the insurance companies. It could be in the form of high deductibles, liability limits, and other things that you might have. I mean, you may be carrying 25, 50, 100 million, but in all reality, if the worst case happened, you might need 200, 250. So that's a risk retention. So everybody, when they retain risk, look at risk mitigation. Risk mitigation basically is operational safety training, management practices, and requirements. These are the things that we do on a daily basis to fly safe, to be safe, to train safe, and to have our a safe operation as we could. There we go. So the final aspect of risk management is risk transfer. You transfer it through contract, through indemnification and hold harmless language, or to the insurance companies. And might I add, and let me underline this, risk managers in the underwriting world use risk mitigation practices to reduce their losses. Next slide, please. So reducing exposure to losses, they increase focus on risk selection with greater attention to clients with poor loss history. They reduce the liability limits of exposure, where yesterday you might be able to get 50 million, today you might be able to get 25, and in certain circumstances it may be 5, 10, or even a mil sub 100. So they are reducing their chance of loss by not offering as much liability limits to their customers. There's also been a selective withdrawal from certain classes of business, effectively shrinking the marketplace. So go back to those slides where all those companies are, and you're now down to about 12 underwriting companies. Well, each one of those has paired those things that they do poorly or they don't know how to make a profit in. So you might end up having 1 or 2 choices out of 13 companies that really want to interest your risk. And the final way is that, you know, withdrawal from the aviation marketplace altogether, the risk retention of don't do it, don't own it, don't buy it, don't sell it. So that's what's happened to you today as an insurance buyer. Next slide, please. So now you have, in the last 24 months, you've lost these companies either altogether or through merger and acquisition. And I might add, it may not be over. Next slide. Marketplace today, major risk is still pretty stable. The mid-market has changed and the P&B has changed, plus the lower limit. So major risk, 100 million and up. Mid-market risk, 100 million down. Pleasure and business is your lower levels of a mil sub 100, a million with a sublimit of 100,000 per passenger, you know, and that type of thing. Next slide, please. So with all this in perspective, and you're the underwriting company, what's your immediate goal? And it's one thing, it's return to profitability as soon as possible. How they're going to do it? They're going to do it with rate increases, and they're going to do it with better underwriting practices, that mitigation aspect. So are all of them the same? No, their rates are going to increase, vary by company to company. It's going to vary by market sector and the profitability that each individual company computes their profitability in that sector. And it's going to be according to each company's past history and changing appetite for business in each of those sectors. Next slide, please. However, the bottom line is this. In my mind, there remains and will continue to remain plenty of capacity to provide cost-effective insurance to all classes of aviation business, some better than others. My second point is the preferred operator, the aviation operation with a pristine loss record, excellent risk management practices, will continue to attract the most competition in the insurance companies, which should lead to the best rate in the marketplace. I have always believed from the day I got into this business in the military, it's been beat into my head. Operational excellence is the best way to go. And in the world we live in, it may be the best insurance your dollar can buy in any market. Next slide, please. So let's get into the hot topics, and I'm sure the questions can come out here, but let me just give you a perspective from an insurance point of view. The market segments most affected that we see are the tour operators and the charter companies. It seems that the utility and passenger missions still seem to be flying, and beyond fewer on-site calls, EMS doesn't seem to be affected that much. The premium basis will likely fall, while rates will continue to increase. So in other words, the amount of dollars that the insurance companies collect is going to shrink, even though the rate they're going to be charging more dollar per $100 of value that you're getting now. So even though you're going to see a rate increase, it's not going to help the insurance company because their base is falling. The pressures to return to profitability remain relevant and are amplified by a reduction in the premium base. In other words, where we were and where we are is not sustainable as an insurance industry. Where we need to be is in all of our best interests, because the last thing that you want is to have your claim run into issues of an insurance company being insolvent. In the US, we have better protections than you might have in London. And in the larger issues, quota shares and things like that also help insure you against that kind of loss. Next slide, please. So what are the insurance companies doing to help alleviate the impact on operators during COVID-19? Well, there's no broad brush programs out there. Each underwriting company has an independent and varied approach. Companies are complying with state and federal mandates, which vary widely. California and New York probably being the most restrictive. So what you need to do is work through your broker to arrange alternate terms and relief. Each will be handled on a day-to-day basis. And I will say this, there is no broad brush program out there like the auto industry and where the company is just giving money back to the insureds. It's all on a case-by-case basis. Next slide, please. Some of the relief that you may be looking for may already exist in your own policy terms, conditions, and limitations. Again, case by case. Consider rotors not in motion. The aircraft is stored, rotors are tethered, aircraft doesn't move, and that's sometimes can be a 60% break on the insurance you're paying now. Then you've got rotors not in flight. That allows you to take the ship out, do a track and balance, run the motors, lubricate the system, but it's not for flight. So again, it's not full flight. That's about a 40 to 50% savings if you're going to go there. It depends on your particular policy. There's a downside to those two options, and that downside may be your bank. Your bank may require a breach of warranty, and if they do, insurance companies don't normally honor a breach of warranty or issue a breach of warranty on ground coverage. That's where a layup credit comes in. And not everybody has a layup credit. And the insurance companies are not universally allowing a layup credit because of COVID-19, preferring to do the rotors not in motion or the rotors not in flight. Some insurance companies would modify it because of COVID-19. I think March the 27th is kind of the date. And again, get with your broker and talk with your underwriter and see if you can work out something with them. Those of you who are pressed might consider a premium finance agreement. Your broker can arrange a premium finance agreement with one of the 3 or 4 companies out there that provide those. I know the finance company that we use, First Insurance Funding, has been very forgiving for late payments and forgiving any late payment fees in an attempt to help out. The monthly reporting forms and the flight by the hour out there, if you're lucky to have a fleet and on those, great, you've got a ready built solution already and you've probably used it. And then of course there's voluntary policy cancellation, mothballing your ship. Next slide, please. Some of this we've already touched on, but at the end of the day, no matter what you do, no matter how you adjust it, you're still going to owe the earned premium. So if today's world, you have an occasion, you still want to have full flight, but you can't pay, at the end of the day, even if the company can arrange some other type of payment plan, you're still going to owe the full premium unless you make those other policy adjustments. And the premium is earned, we owe it, and at some point in time you're going to have to pay it. So next slide, please. Questions?
I think that brings us back here. We have had a couple of questions, Jim. One is a variation on a topic you and I discussed before we came on the air this morning or this afternoon. It's from Gregory B. And I'm going to paraphrase a little bit. I am new to the industry, being involved for 8 years, and the common theme by all owners, chief pilots, etc., is that they would prefer to interview a candidate to determine hireability and safety instead of allowing insurance companies to set the minimums for them. Yet it seems that the minimums are going up based on the insurance requirements. Can you address that?
Well, that's can be answered in a couple of ways, and it is always has been and always will be an issue. But let's put it in perspective. What does the insurance company want? The insurance company wants a pilot who knows his ship, who knows how to fly it, who is trained to fly it in all conditions, and on the worst day, be able to return home and land safely without injury to the aircraft or to a passenger or someone outside. That's what they want. The question is, how do we get there? I suspect that that's what you want too. So you've got a problem in that we've had a shrinking pilot force for a long time. We've got all these young entrants. How do you get them to that point? Again, I think if you will view your underwriter with your broker as your allies and partners in this business, what the underwriter needs to know is to get a good feel of what you're doing. They have no choice but to deliver a safe and stable pilot force for their underwriting companies to agree with. So they're going to have all those mitigating factors. And over the years, they know that training reduces accidents. It doesn't reduce all of them. So our dilemma is, okay, how do we take this young recruit and turn him into a productive member of our aviation team? So at the end of the day, again, back up, take everything that you've become accustomed to in the past 8 years, throw them away, start with a blank page. Let's create a training program that is safe, cost effective, and the underwriters can buy into. And that's, to me, that's the approach you do it with. I'm going to go beyond this just a little. In November, I went to London and we had a panel discussion on this very topic for a whole hour for all of the Lloyd's underwriters. And it was comprised of an operator, a training provider, and the CAA, which is our equivalent to the FAA. One company, I think are called L3, touted that they could take a zero-time pilot, put him through their academy, pump out a 250-hour commercial instrument pilot for which Lufthansa could hire and put him through their training program about 3 months and then into the right seat of a Airbus. And someone who came through the Vietnam era, came up in the military. I mean, we went through 52 weeks of pilot training. We went through another 3 months, and then we went to another 2 years of mentorship. And I was a shiny silver barred lieutenant with 1,200 hours flying a C-141 around. I will tell you, it's a challenging task, and the military spared no amount of money. I doubt seriously whether a 350-hour pilot over in the right seat of an Airbus can handle a bad day in which his captain is incapacitated. So those are the kind of issues that we got to deal with. You got minimum requirements by the FARs. You're going to have to fulfill those. What is the insurance company, and what do you need to do to find these recruits? And I think you're going to have to change how you recruit a little bit and how you train.
Okay, this might address just something you alluded to a second ago. This is from Alfonso Martinez. Do you think this mirrors what is happening in London?
I'm not sure I understand what's happening in London, what he means by that.
Maybe we can get Alfonso to provide some further detail, and we'll get back to that question then. This one is from Matthew. What is non-payment insurance? I read an article regarding the Green Seal deal is born out of Marsh's Aircraft Finance Insurance Consortium, a non-payment insurance product designed for banks and capital market investors that are now funding new aircraft purchases from Boeing. So maybe just what is non-payment insurance is what Matthew's looking for.
To be honest with you, I don't know. I don't have an answer for you. That is a good question, but it sounds to me like it's designed for the big operator, the Boeing operators, and the manufacturers. I'd have to look into it.
Okay. We have a question from Raymond. I own a Bell 47 G2 and fly occasionally. What should I be paying on average for a B&P? And thank you.
A
I don't know if you
P&B.
want to address specific
I
cases
really want to get away from addressing specific premiums, because the variables are this: age of aircraft, the type of flying you're doing, how much flying you're doing, your pilot qualifications, and the type of maintenance that you're doing, all those risk management factors that we're talking about. So while you as a seasoned pilot and your Bell helicopter might get one rate, and me as a rookie with 10 hours total rotor wing time, I wouldn't even be insurable. So it goes from one end to the other. If your broker is doing what he's supposed to do, if you're doing the training that puts you in the best category, and if you're flying frequently enough, I promise you, your broker can find you the best rate. It's not going to be the rate that you had in 2015, 16, and 17. It's not. The reality is, unless the insurance premiums get back to where they were in 2009 and 2008, the industry is still going to be soaked in red ink. And if accidents don't fall back from 70% now, back down to around 50%, there's going to be continued red ink. And that's only going to be one thing. The bad news about helicopter operators, of all the operators out there, as a whole, your track record is not the healthiest in the world. And somebody said there's no such loss as a partial loss in helicopters; it's a total loss. And in many cases, that is the truth. So your loss ratios and loss rates are much higher than they are in the fixed wing sector.
This is from Daniel. Is it known what has caused a reduction in the premium base?
A reduction in the premium base is being caused by fewer people flying their helicopters and aircraft, by lower hull values, by lower liability limits being offered, by people putting their aircraft on ground not in motion versus full flight, doing those type things to reduce their outflow of cash. That's what you're seeing right now with people doing, grounding their airplanes and grounding their fleet and things of that nature. So, and then the other portion is we've got a significant segment. They're just getting out of the market altogether. They're selling their aircraft, they're grounding their aircraft, they're getting out of the maintenance business. They just can't sustain what they're doing.
Alefami, I'm sure I'm mispronouncing that name. When you operate overseas, the local authorities always force foreign companies operating in their country to get local insurance, which raises your premiums. Is there a way to mitigate this?
No, don't operate in the country. You go to Mexico, you're going to have to pay what I call the Mexican liability insurance, and if you don't have it, they could confiscate your airplane. So every country that you go to, every region that you go to, has a minimum liability that they're looking for. The EU, China, Asia, and other places like that. So you're not going to get away from it.
Looks like he has a follow-up question also. Why is insurance in Africa aviation, why does it all go through one clearinghouse in London, apparently Lloyd's? not giving room for competition of quotes?
Well, Lloyd's is in fact a clearinghouse in and of itself. It's not an insurance company, it's a marketplace. And Lloyd's has maybe 5, 10, 15 companies that have a seat at Lloyd's. And the way you do an international risk, you take a slip, a literal slip, and you got to fill 100% of it. And you might go to Amlin, you might go to QBE, you might go to Global Aerospace, and each one of those takes a percentage of it. And so at the end of the day, you could very well only get a 1 or 2 quotes out of it. The other issue is the marketplace really and truly is small. And the last issue, it's Africa. So Africa presents some risk factors that some insurance companies just don't want to take. So for Africa, the marketplace is truly shrunk. And you may only have 1 choice or 2. And those may quota share together to fill your risk.
This might follow along the same line from Ray Pena, Guardian Aviation. How many underwriters are there for Rotorcraft?
Let me go back to my slides. Now I've got my own up here. Let me look at today's market. Today's marketplace, Rotorcraft, in one variation or another, AIG, Allianz, Global Aerospace, USAIG, and Star will all do Rotorcraft to one variation or the other. AXA XL has kind of gotten away from it. They're not real thrilled about them. Old Republic is kind of shy. QBE, it's very selective. W. Brown will do Rotorcraft at mid-market levels. Aviation Insurance Managers will. Acceleration, maybe. IAT, no. And US Specialty, yes. So 1, 2, 3, 4, 5, 6, 7, and maybe 8, depending on your risk.
This question came in, they asked name with be withheld. Maybe you want to address it offline if that's the case. In my county and state, the governor prevented all flight from March through today and beyond. As a matter of law, my helicopters cannot fly. If a claim were ever made, the insurance company would deny coverage, saying we should not have flown the helicopter. I asked for the carrier to return the premium and not to charge going forward until we are legally allowed to fly, but they refused. They are charging for coverage they basically legally cannot provide. He feels it's unreasonable. Is there a solution to that issue?
Well, there's a lot more to it. I don't want to speculate. I will say this, that if your policy is in full force and effect and you fly it anyway, regardless of what the governor says, likely you have insurance there. The other mitigating factors, again, I told you what they were. Voluntary cancellation on your part guarantees that they'll return the unearned premium if that's what you want to do, and then have it reinstated. Going and doing ground not in motion or rotors not in motion or rotors not in flight will also reduce the premium. But there's some level of insurance that's there. If a tornado came through your hangar and tore up all those aircraft and your policy was in place, they didn't go anywhere, the insurance company is going to be on the hook for that. And they're going to come out and they're going to adjust your claim. I have no doubt about that. So again, it's between you, your broker, and your insurance company. And at the end of the day, if you just want to cancel your insurance on your own and have no insurance at all and to get your money back, then that's always your right to do so.
Okay. From Jack Harmon, can operators get an insurance premium break that implement new and proven safety programs? For example, if an HAA operator, helicopter air ambulance operator, can show the new safety program can reduce accidents and incidents and therefore will reduce claims, will they be eligible for a rate reduction?
The key words there is eligible. And here's the way it works. If you've got a safety program, you get with your broker, you take your program to the underwriters, and you say, can you give me a discount if we do this, 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 and this? And I promise you, the insurance companies are always going to listen to valid and robust safety management systems, whether it's formal or yours or somebody else's. The underwriters want to work with you when it comes to safety. So I would say yes, those things might put you in that preferred group whose risk is lower incrementally. So, but is there a quote unquote program? No.
He has a follow-up question. Do insurance companies ever mandate operators to implement specific safety programs directly in order to be insured?
In order to be insured is the key word. In order for them to agree to insure you, yes. The insurance company could say, I want you to go to I want you to take this segment of your group to a qualified and approved simulator-based training facility for your make and model of aircraft. And if you do that, this is what we're going to do. You got to remember that an insurance policy is a contract. If you do this and pay us this amount of money, we're going to accept this amount of risk from you, which includes both your physical damage and the third-party liability from your operation to a certain level. And with that, remember that risk management elements that I showed you, back to risk mitigation. That's what the insurance companies do. They mitigate their risk because they've said they're going to take this risk on. They're going to accept the first $1 million, $2 million, $5 million, $25 million from you. But we want you to operate in this certain way in order to get that benefit. So I see where you're coming from, but it really is a give and take, and it is a contract.
Next question is from Anthony Esposito. Can you give a quick overview of the UAS market for insurance?
I actually wasn't prepared to discuss the UAS market. I will say that the UAS market, I think, has not been affected a great deal by this. I think that there is plenty of capacity out there. The UAS market generally has lower liability limits, and so there's not a lot of exposure. There's companies out there who, for instance, you go to my website and click on the drones, and you'll have a choice between Global Aerospace and Star to get UAS coverage, and it's done almost automatically. Takes about 15 minutes. So I think the market is still there, and the liability exposure is low. I think that the insurance companies would like to see total premiums go up, and we'll see how that market sector works out. I don't think there's still a lot of empirical data by which the number crunchers can predict that level of uncertainty that we talked about.
From Jay Hefferman, is there a line that bad actors can cross that will get them thrown out of the insurance pool?
Yeah, a lot of claims. Violations of your open pilot agreement, Part 134.5 operators. The insurance companies have databases now, and so they have long memories. It's not a matter of fact of being an insurance pool as much as it is about finding an insurance company willing to take your risk. There are a lot of techniques that people have used to try to get around showing their track record. But there's what I call the truth in lending law in an insurance policy. Withholding pertinent information, valid information that's reflective of your operating style could very well void your contract, your insuring agreement. So yes, there are people out there who have just driven themselves into a deep hole, and it's forced sales. It's forced them to sell their business. No one wants to. You get a guy with a 400, 500% loss ratio. How many underwriters out there are going to want to write it? And at what premium if they're willing to?
From Carmine Berdino, is age a factor regarding insurability and premiums? Is there an age limitation once reaching a certain age that they will no longer insure?
Well, all you have to do is look at my gray hair, and I will tell you that yes, age is a factor. I've got my own airplane, and even though I'm in the business and they don't know I'm a superb pilot in wonderful health, I tell them so every time I get a chance. My liability limits that they were willing to offer me continue to shrink, and the number of insurance companies willing to insure a 70-year-old guy has shrunk. So yes, there is a line of demarcation. I will tell you, it is a gray line. Some say we don't even consider anybody over 70. Some say 75. Some insurance companies will stick with you as long as you can carry a class 3 or class 2 medical. I don't know if any of you guys remember Frank Borman. Frank's 90 and he's still insurable. He was the president of Eastern Airlines when I was there, nicknamed Moon Man. Apollo 8 went around the moon, took the famous shot of the Earth coming back around. That's, I mean, 90 years old, still flying. He's got a T-34, but his liability limits are $250,000, and that's it.
Have you seen any underwriters pull out of helicopter insuring and only work with fixed wing? And that's from Terry Palmer.
Yes, and you see it all the time, especially certain segments. AXA XL is one of them, I think, that's actively doing that. Every one of them are limiting their willingness to do certain classes of business, and I do see that shrinking. Most everybody that's not on the market list that I told you today, the first thing that they cut out was their helicopter operations. So you see AXA XL shrinking. Old Republic is not what I would consider the du jour place to go. W. Brown has cut back a little bit on what they do. And at the lower ends of the markets, aviation insurance managers and U.S. Specialty continue to do it, but just at the low liability limits.
From Brandon, in lieu of increasing rates and shrinking the number of operators, and in turn reducing the income base, how is the industry helping to limit exorbitant losses with caps and legislative protections?
That I can't tell you. I don't think that the industry is really looking for legislative solutions. I think this is a pretty independent industry. They don't share a lot of data. They don't share their rates. They don't share their loss ratios and their loss records. The data that I showed you up there was done by reinsurers on an aggregate basis. I don't think this industry is looking for a legislative solution. It's truly a worldwide organization, and you don't have a worldwide legislative area.
Okay, this one is a little bit long. It's from Mark Pomeranz. I was informed that I have two choices during COVID-19. One, ground the helicopters, or two, pay the full fare. And here's some of the details. To ground the helicopters or ground the aircraft, there is certain maintenance required. When maintenance requires turning on the aircraft, the blades move, which is deemed, per the insurance company, a helicopter that is not grounded. So I can either leave the helicopter to rust without maintenance and forget all the maintenance requirements if I want coverage for grounding, or I have to pay full fare for a helicopter that cannot leave the ground but has the blade spinning, for example, balance. Is the carrier allowed to do this, or is this somebody that's acting in bad faith?
Every carrier is different. What I would tell you is something called rotors not in flights. One of the points I made that may be a possibility for you. Again, it's to your broker and your underwriting company to see if they will do that. It's the same issue with fixed wing. Ground not in motion on fixed wing is not supposed to include taxi and engine run up. However, you can get an endorsement to say, yes, that's allowed once a month. I've got many clients that are kind of in that situation right now. They're now into their second month. So once a month, they can take the aircraft out and they can exercise the engines and the hydraulic systems very the same way as you would doing a track and balance and an engine run on a helicopter. So I think that solution is there. And I would suggest that you go back to the broker and ask him to make those suggestions. And if not, I think that maybe you and your broker might be able to find a different home that may have not been the best insurance company for you.
From Pat Foley, could a private helicopter owner realize premium cost savings by accepting operational restrictions such as no night flying, no special VFR, only using improved or paved helipads, or installing wire strike protection, HTAWs, or other technology?
Repeat the question again, the first part of the question.
Could a private helicopter owner realize or receive premium cost savings by accepting operational restrictions such as the list that they provided?
The way each individual helicopter and operator is evaluated is on those things. So many times you may have those mitigations already factored into your premium. You know, you may be giving instruction in your helicopter, but you're not renting it out to third parties. It's just dual only. That's a restriction that gets a different price than otherwise. All of the riskier stuff that you do, the lifting, the power lines and things of that nature, aerial surveys, those type things, all are factored into what your premium is. So I think it already is if you're fully disclosing your full operation. Here's the real key here. Tell your underwriter through your broker what you're doing. If you don't tell him what you're doing, he's going to assume the worst possible risk because your helicopter policy may not exclude those things. Or he's got to end up coming back and writing a bunch of exclusions in it anyway. You might read your policy into the exclusion section and be very surprised what is already excluded. And some of that may already be there.
And that makes sense. Communicate with your agent, your broker. What can OEMs do to help customers or underwriters achieve better insurance rates? Or is there anything they can do?
In my mind, yes. And as rates go up, I think OEMs and I think that organizations can do something, and it's called safety programs. It's called training programs. If OEMs could do the industry a wonderful service if they would just build and create more simulators that people have got more access to, so that when they do their training, they're not putting their helicopter at risk. And during times like these, you got a simulator that you can go to. You can keep your skills up. And I promise you, these simulators, I call them visualators now. The video is so good, you can almost get vertigo in there flying them. And the procedures that you can do and the experience that you get in these things can do wonderful things. So if you belong to an association or an OEM association, and that association is putting together a true training program that's going to take you above and beyond to be the exceptional operational pilot that you can be, I think there's underwriters out there who look at that and says, yes, now there is something that we can work with you on.
We've got a few more minutes.
Let me just add
Sure.
this.
Sure.
In 2003, 4, and 5, there were several programs out there like that. With the soft market and premium rates taking a nosedive, those programs lost their value. Now, with rates on the rise again, it becomes more sensible for those programs to come back into being. But they've got to be true safety-related, safety dividend type programs in which there is a true reduction in risk, a true increase in the safe operation of a particular operator.
We've got time for a couple more questions. From Brian, is there a reason to be concerned that the increase in premiums might lead to fewer aircraft purchases, therefore further reducing the insurable base?
That's always a risk, I think. Everybody takes a look at their total cost of operating, and training could be included in that as well. It just puts some operators out of the box of comfort that they want to do. The other part of that is, and this is what happens, companies look at that need lift, look at the cost, and build it into what they charge, and it becomes a different set of numbers, the true cost of their operation. And they look at that and they absorb it in different ways. And if you're a commercial operator, you absorb it in different ways by charging your customers more. If you're a maintenance provider, the same goes for there. So the natural answer is yes, it's going to have a tendency to reduce it. But then again, we're resourceful people, and at the end of the day, if you can make a profit from it, people are going to find out how.
Not sure if this is an insurance question or regulatory or possibly technology. It's from Matthew Shank. Have there been any notable changes made since the Kobe Bryant crash in Calabasas, or are there items on the horizon that we should expect as an industry?
From a regulatory standpoint, I couldn't answer that. You'd have to have somebody from the NTSB and the FAA. From an insurance standpoint, it heightens our awareness that we need to have more scrutiny. The underwriters are going to be asking more questions. The underwriters are going to be wanting, and they're already demanding, better documentation about pilot qualifications and training. And so it's going to be self-correcting in that aspect. But no, they want to get away from that type of operation as much as they can. And unfortunately, sometimes the initial reaction is going to hurt a little bit.
Okay, I think we'll do one more. And this is from Gabriel. Will a waiver protect us for sightseeing tours? And if not, will the insurance protect us for COVID-19 claims?
Will a waiver protect us from sightseeing tours?
That might be a regulatory question we need to have somebody address offline.
Yeah, and as far as the COVID-19, I don't think you're going to find much relief from that. I think that the insurance companies feel well insulated from you flying around with somebody and they getting COVID-19. It's just like you going to the HAI and say, I got COVID-19 at the HAI. So, but I will say this, that one insurance company has put a moratorium on writing new commercial business for the very reason of COVID-19 and what that has done about social distancing. If you've got they won't write anything if there's going to be a passenger on board. Nothing new.
Well, I guess that will lead to one final quick question from Michael. Are you seeing operators reducing or foregoing the maintenance coverage under their policies during this period?
I'm sure that some of that's happened, and I'm sure that maintenance is being deferred. As a broker, I don't get that close to an operator to know what maintenance he's doing until sometimes after the fact. It's human nature to try to cut costs where you want to. At the end of the day, it's part of your safety management system and how well you want to do it. Unfortunately, this is just it's kind of where we are.
Okay, Jim, well, certainly appreciate your time, the information. I will say that based on the statistics, I could see while this was going on, you've held the attention of everybody who came to watch today. Certainly appreciate your time and your assistance with insurance. I would like to wrap up today with just a few details that we'd like to pass along. For all attendees, there is a follow-up questionnaire that will be coming shortly. We do appreciate your assistance in filling that out. Knowing what you want to hear helps us to prepare for future webinars. Speaking of that, save the date, next Thursday at 4 o'clock, 1600 Eastern. Our webinar will be on maintenance and training compliance during the global pandemic. We have people from the Aeronautical Repair Station Association and the Aviation Education Technical Association that will be joining us. I know I messed up that last name. Sorry, Crystal. Watch for a link in email, through social media, and in Rotor Daily, or however you've already received the links in the past. We are still looking for COVID-19 impact stories. That's how our government advocacy people learn what's going on and how they can work with the people on Capitol Hill to help provide financial assistance if it's still necessary. And finally, if you have compliments, if you have complaints, if you have questions about HAI, please reach out to us. We always want to know what's going on, what you think we could do better, what you are happy with us doing. The best address for that is president@rotor.org. That's self-explanatory. It goes right to Jim Viola, and we would like to know. Again, we appreciate everybody's time today. Thank you so much, and we look forward to joining you next week.
Thank you very much for allowing me to speak, and I appreciate all the questions that are out there. Thank you.
Absolutely. Thank you, Jim. Everybody have a good day. Stay safe, fly safe, and we'll see you next week.